So now we are at 9:01. We are on Facebook Live through this Zoom call. Good evening, everyone. So I hope that you all have your dinner and enjoying yourselves, comfortably, at your home, watching this video. My name is Jimmy Chai, and together with me tonight is one of our prominent financial local blogger. His name is Terence. And so I know Terence for a couple of years, and he has been helping me in terms of, guiding me towards the proper, investing strategies. And some of the tactics that he has shared with me apparently has also affected some of, fine-tuning the way I invest in the stock market, or the way that how I look at the stock market itself. So tonight, I have this opportunity to invite him to come to this Facebook Live, and Terence is going to share with us in terms of how he, how he look at the market and things like that. So without further ado, I will just let Terence introduce himself. Terence, over to you.
Hi everybody. Good evening. I hope everybody had your dinner already. So today we are going to talk a bit about the market, and then probably what Jimmy is going to ask me. So I'll just give my thoughts. So anyway, other than Terence, some people know me as TUBInvesting. So I'm a blogger that has been blogging since I think quite a way back. Although I look like that, but I think I'm not very young. So I'm about 36 years old already, and been investing for about the last 10 plus years since my uni days. So yeah, that's my experience for that. So yeah, let's continue.
Okay, we'll do. Right. Thank you very much, Terence. So now today, let's jump straight to the point. All right. So today, the Singapore STI jump, I will use the word jump, 72 points. And we know that the US elections results are, right now they are still counting. Although Biden is still leading the way, but it does not mean that Biden is a sure winner. Donald Trump is still, perhaps, in the last minute, he may flip, the table. So, Terence, what's your view right now in terms of, how do you see today's jump, 72 points? What causes this to this sudden surge?
Okay. Basically, I think Singapore is always a lagger. We always follow how US goes. So if US is very happy and it goes green, and Singapore generally goes green, right? So that's how I view this jump. And then because as we know, even now at futures, right, US is still green because I cannot pinpoint the reason why they are going green. It's because Trump is losing, so they are going green, or is it because yesterday it was also green when Trump was leading, and today Biden is leading, so it's also green. So I cannot pinpoint what is the reason why is it green. Probably just the market is happy, and then we wouldn't know how the market is going to feel, right? So to me, I'm just seeing this as a show, as a movie. To me, I just eating popcorn and every night just look at the election and then feel like, wow, so exciting, But when I see the Singapore market today, it's interesting because I think the DBS and U.B. actually came out with slightly lousier results. If I'm not wrong today, I read some articles and OCBC was okay, but then I was looking at the banks, and when STI goes up, right, that means the bank also goes up generally. So I was wondering, so generally, right, nobody cares about fundamentals. Right now, right, everybody just focus on the election. So these kind of things are all very short term. So right now, that's how I feel. Everything is short term. When it's green, there was one thing that I heard recently is this guy in YouTuber called Meet Calvin. So he always say, when you only buy when it's red, when it's green, right, you just let it be and then just watch the show and then just be happy, go and sleep, something like that. So I'm also doing the same thing. So stay invested, but only make purchases when the market is red, right? And if you are worried, if you don't buy during the red times, right, you will always buy at the high, and that's what's going to happen. So you'll be volatile this whole few months. So everybody should just stay focused on companies. That's all. and watch the show as it goes on.
That sounds like a strategy. Green don't do anything, then red start to buy. That's a strategy as well itself.
Yeah. That's how I see it, like for example, just FYI, I have OCBC, so it comprises of about 15% of my portfolio, and then with that, right, I know banks will not do well probably in March because generally provisions are high, right? It's a definite thing that it won't do well. So dividends will be cut in March, probably, or it's already cut, so it will stay low in March. People, Singaporeans will not be feeling very happy about it. Probably they will sell down. So that's another thing that so for me, right, I have 15% in my portfolio, that's OCBC. And I'm cutting down, as in I'm trying to cut down to about maybe 13-12%, kind of like, get some more cash, just for that big cut. Then now, to me now, it's a good opportunity for me to cut down because my average price is not too high also. Okay. But I don't mind getting that cash out a bit. And then when March comes, right, when people are really complaining that, wow, why the banks cut dividend? Then that's when I will feel happier and probably I will continue to buy in again. This is something along that line of, although it's people feel that 2 or 3% is not a lot, but right now I know if as a portfolio management thing, right, it's going to affect my portfolio drastically, 15%. So might as well now is a bit when I cut down a bit. It will make me feel better, generally. I mean, even as personally, when I see the price fall further after that in March, right, I'll feel like at least I did something.
Understand.
That's how I see it.
Okay, before I ask you the next question, guys, if you're on Facebook Live and you find this video interesting, please share these live sessions, with your friends so that they can learn about, this conversation, this investment session or conversation with Terence. And you have questions, you can always type, under the comment page, and we will have time for you all to ask questions, and we will find time to answer them as well, right? So, Terence, when you say you sell away OCBC and you sort of like get back some cash, what do you do with the cash?
I'll probably reinvest into stocks that I think will. One way is either I hold the cash, or I can reinvest it into other companies that I have that I think will probably do better in March. Or even reallocate them into companies that I think is going to perform better in the future, rather than you already know OCBC will be slightly worse off. Just don't take such a huge position, or I reduce the position and then use the money to invest in something that will be better in March. So it's like an opportunity cost calculation, right? So some of the companies, like maybe I share one of the company that in Singapore that I just brought recently. Okay, so one of the company I brought recently is Sing Holdings. So Sing Holdings, right? They recently has a EC tender that they are the highest bidder. So their share price has jumped slightly, and their value investing company, GEM or whatever, they are NCAV, net current asset value is much higher than their current share price. So that's one thing, and then they want a tender. So that's something that I think is interesting. So I brought some of it. And if they get a tender, they have cash also. So probably I'm just wondering, probably in March they may give better dividends, or no. The dividend yield will definitely be higher than OCBC, for example. So there's some opportunity cost strategy that I have done as well for the Singapore portfolio. Yeah.
Right. Okay, so on the other hand is that, let's say, for example, you're talking about Sing Holdings, right? What actually attracts you most in terms of those kind of stocks?
Okay.
I mean, what is the main thing that attract you, to sell away OCBC and then move to Sing Holdings? I mean, this.
Okay, just so FYI also I have I have fundamental scorecard.
Yes.
So I'm the founder of fundamental scorecard.
Yes.
So let me share the Sing Holdings scorecard to you guys. Okay. You can see this, right? This screen. Okay, so Sing Holdings.
We have not seen the scene. Okay, now we can see. Yes.
Okay, sorry, I think it's a bit lagging. So one of the thing is that my scorecard is telling me that it's very undervalued, and then they actually show, I think, the company health, right? They have no issues, and then it has a good balance sheet. So basically, these are quantitative stuff that is only a part of the analysis, right? So the qualitative part, like I said just now, right? They got a tender. They are the highest bidder. So the first question I ask myself is, since they are the highest bidder, right? Are they going to be awarded this parcel, land parcel? Then you think of the other question. Singapore government, GDP getting lower and lower. It's quite foolish if they choose a second bidder. And then, right? So this kind of questions comes to my mind. I think they confirm give the higher bidder. No point giving the second bidder. To get the cash into the GDP and then to grow the country and stuff like that. So it's undervalued as my scorecard, and then their health balance sheet is very strong. Like I say, they are cash NCAV company, all this stuff, right? So this gives me a very high level view of what's happening right now for Sing Holding. That's why I brought into it. So yeah. So that's all for Sing Holdings. Yeah.
Good. So with this strategy that you have, I mean, are you just only looking in Singapore market, or are you just like others are now start to look beyond Singapore market?
No lah. Okay, I also have to move along with the times. Although I invested 10 years in the Singapore market, I invested quite long time in the Singapore market, right? So I've also gone into the US market the last 3 to 4 years, and then probably right now, right, I went in as a value investor in the US market, and then you always see this, value stock in US, then you see this kind of thing can buy, man. They always raise value investor means that their asset is lower and stuff like that. And then you wonder why their assets so low. Then there must be a reason kind of thing. Then you cannot justify, and then they always raise cash after that. They have not enough cash, that's why share price, and then they raise cash and stuff like that. So it's a vicious cycle. So recently, within the last 1 year, 2 years, right, become more like you can say a growth investor, a qualitative investor, or a business analyst that looks more into qualitative aspect. So as usual, right, Singapore US company, what I have gone into is I've also gotten a FANG stock. I mean, quantitatively wise, right, I just follow my scorecard. My scorecard tell me to buy. Then quantitative, I don't need to spend so much time on nowadays since I created this whole thing. So valuation wise, similarly, I think they just tell me the initial value is higher than the current price. Well, then that's good enough. Company health is very good. In terms of company health, when they say it's very good, right, it means that they have a strong balance sheet, enough cash, stuff like that. And then when you see that their intrinsic price is already higher than their current share price, so it doesn't matter. Then you go, so after this, as usual, I always go into the point where you look at the qualitative aspect. So qualitative aspect, the main thing right now, everybody's looking, other than the US election, all those stuff. What's really affecting Google is that their antitrust that suit that the US government is trying to sue them, right?
Yep.
So that is actually simply, I think Google is worth, if it will be better if the US government break them up, because to me, right, the sum of parts, right, is higher, is much more valuable than their current share price. If they take them into parts, right, I think Waymo themselves as automotive, all this EV self-driving car. This itself, right, is I cannot value it right now because I don't know the price. But when you break it up, right, now you look at Tesla is 400, right? I don't need 400, I just need 100. This kind of thing, right? So you imagine the Chrome itself is as a business single entity, right? It's going to be damn huge. So to me, don't need to see too much. Like my qualitative tell me this, then you look at qualitative, you understand the business, then just go for it. That's how I see. And in fact, FANG stock is so popular, you can get the analysis anywhere. I mean, anywhere in the world, right?
That's
so like
true.
everybody will start talking to FANG stock. So there's so much info out there. The people are dissecting their info at every YouTube video. You type Google and everybody has talk. And everybody, 90% is talking about their quantitative aspect. So yeah, so it's which is similar to what I have here. So I also invested in, you see, a value stock. Rather than saying it's
wow, okay,
Macy.
I like this.
Macy. So if you went to US before, they are one of the, you will see in Manhattan, right? They have this huge building and it's Macy. I went in and I came out and never buy anything because too expensive. So, but anyway, for me, right, when this company comes to me, I was like, brick and mortar, who cares, right? Like who cares about buying a company that's in brick and mortar? But how it, when you do, so even when my scorecard tells me, the value is very good, right? The interest value is very good, but you see, like, there are other pointers here, like, cost, not good. So you just like, shit this is not good. So that's when I think as a business, my qualitative self, right, I'll go and look at the business, to see what's happening right now. So one of the main things that attract me to this purchase, right, is that if you Google the top 10 e-commerce site in US, they are one of the top 10. I mean, Amazon will definitely be the number one, then eBay maybe, then I think there's a few. Then I think on the 6 onwards and below, right, it's all the like Best Buy. Don't know, some of them I never hear before. Yeah. But Macy is one of the top 10. And in fact, they are number 9. And in fact, during this COVID period, right, they have additional 4 million subscribers, like they have this rewards system, right? So they have 4 million new unique users. So you are wondering why? Like why? So they actually has a lot of information on their transcript. They also said that people are buying more luxury goods in US right now. So in that sense, right, they are actually selling more expensive product through their e-commerce. So in that sense, they are having a higher profit margin, although they are making losses in view of the COVID situation. But if you look at the losses, even this scorecard tells you there's a losses. You see so high net profit, that's suddenly red. Then you as a business analyst, you want to go in and see why is it red. So I go in and see, and it's like, this rate is like, how much is cash is like, this is almost, I think, 3 billion of rate or 4 billion, I forgot. But the cash losses is only $7,000. So the rest is all impairments. So and then you imagine what is their strategy, right? I impair so much for one. So this, to me, I think it's like a business strategy at their own. They're trying to impair so much of their balance sheet to use this opportunity to impair the balance sheet rather than saying that they are making losses. They are not. And they have so many businesses, there are so many stores in US. They are using it as fulfillment center. So you imagine like Amazon, they want to like they have this fulfillment service, right? So Macy also have their own fulfillment service. In fact, they have a next day delivery service that they have tied up with this company called Next Door Delivery. So I mean, quantitatively it looks bad. And I have to say that there's a 40% short interest on this at Seeking Alpha. So to me, right, there's a reason why the share price is being pushed down now, because the short interest is so high. People are saying that this is a break mortar short. But once you hold this long enough, within 6 months to 1 year, right, when the short interest is all gone, right, you'll see the whole share price is going to balloon up, because there's a lot of pressure downwards now in terms of share price. But if all this pressure is taken away, you can imagine that the share price will shoot up significantly. So that is one of the main theory, one of the main view I had. So everything joined together, then I think, this is like the damn good buy, regardless whether is it brick or mortar, because people has the wrong conception, and when people have wrong conception, it's the best time to buy into the company.
Good analysis. So Terence, you are invested in these 3 stocks, am I right to say that?
Yeah, I invested in these 3 stocks.
Okay, so ladies and gentlemen, you are at Zoom or you are at Facebook Live. So Terence has just shared the three companies that he has invested himself. One is Alphabet, which is Google. Second one is Mercy. These two are US company. And the third company is Sing Holding. Now, if you have any questions on this, the conversation that we had earlier, you are welcome to type on the either the chat box or the comment page. We're more than happy to answer those questions. So, Terence, with this investment that you have, what sort of time horizon do you have? I mean, are you looking into sort of like 6 months to a year, or are you looking anything more than that? What's your time horizon for this?
It also depends on company. Okay, I advocate long-term investment, as in when you purchase it, you should ensure that you have the intention to hold it, like, let's just say 1 year, at least above 1 year, because companies doesn't change overly or quarterly or even monthly or even tomorrow, right? So for example, people can say like Boeing, let's just say, just give a Boeing. Boeing has a huge order from, let's just say, Emirates, for example, then the share price will go up. But you all know that this order, right, doesn't come immediately. It's not like, oh, tomorrow, 100 airplane come out, then, can give to Emirates. No, this doesn't happen. This go through like maybe 4 or 5 years. Right? Then the revenue is like, okay, this is a 200 million deal. So what? Like this 200 million, you have to divide it accordingly, and it's not immediately, right? So this kind of things is like, my time horizon is dependent. It's very dependent on how the company, like for example, Macy, my time horizon is like, minimum I know is 3 months, because festive season is coming. That's definitely going to have people are going to spend money during Christmas, Thanksgiving. So that's a good thing, right? So yes. I would expect the March annual 10K to be very good. So that's a short-term horizon. But having said that, if the share price doesn't continue to rise, COVID continues, I don't mind holding it longer than that. Even if I hold it to 1 year plus, because the fundamental doesn't change. That's one thing, right? So for example, for Sing Holdings, they are going to get this bid, and then people will say probably the share price has already priced in what is what this bid is, this tender is already, right? It has already priced in this tender that they are going to get this tender. So, but in my opinion, like I was looking at their balance sheet, and then there's no point holding. They are not going to spend all their cash just to pay off the government, right? They'll take loans. And interest rate is so low now. So if it's 373 million, that's how much they're spending to buy the land, right? I don't think, firstly, they will at most use 100 million, and then the other 200 plus million confirm they will take loan, low interest rate. Then secondly, I roughly know their land size per plot per square foot basis, cost per square foot basis, right? It's about $500 plus. So you see the recent EC, they are selling at $1,000. Roughly, the construction cost is about $200 per square feet. So 500 plus 200 plus per square feet, they have to sell. I mean, plus all the overheads, maybe about total cost in is about 800 to 900. If they sell per square foot at $1,000 or more, right? Yeah, they are going to get their money back for Sing Holding. So you see this kind of view, right? You will have you can buy. I have a long-term view on them. But having said that, if today Sing Holdings from the I went in at 37 cents, so if it rise to $1, don't tell me I have to keep it and loan down. No point, right? So if short term, I can sell first lah. Doesn't matter, right? Get the money back first or what? So that's how I see investing. Long-term view, to make sure that you wouldn't be killing yourself. You wouldn't you have rational mind. You don't do irrational things. But short-term view, when it comes to sell, it's okay. I don't see that as a. You don't have to say I'm a value investor. I should hold 10 years, please lah. Like Warren Buffett is not performing well for the last 10 years or so, right? And you don't have the cash like Warren Buffett. He can hold because he still can hold so long, right? You're not. And probably let me add, like one of the strategy that I had now is that since you are talking about STI, right? What I feel is that people are hating or unlove Singapore stocks right now. Like everybody is saying, like, especially the those people younger than me, especially everybody, wow, most exciting, I must go US. But the fact is that because Singapore stocks, especially let's just say STI, is the easiest. STI is so under now. That's why it's like so low. But one of the arguments, in fact, I write this post in my blog. The post I write is that if you don't believe Singapore will rise back to, I don't need to say 3,000. Let's just say 2,800. Then why are you still staying here in Singapore, right?
Yes.
Like you don't believe the country will recover. Yeah, okay. I believe US will recover. But no, I mean, we have to face reality, right? We are still in Singapore because you believe that Singapore will recover.
Yes.
In a long time. So I use Singapore as, to be honest, I use Singapore as a hedge. I invest Singapore, to me right now, I view Singapore as a hedge against my US growth stocks. So that's how I'm hedging my strategy as well. So when I talk so much today, right, tonight, there's a lot of strategy involved, like buying opportunity, selling a bit to get some cash for opportunity, current opportunity. Buying Singapore as a hedge against US growth. Because I know eventually when, the growth is next year and maybe, Trump say this, say that, or whatever, Biden, whatever, suddenly the share price drop, right? I know my Singapore share price may rise by then and I can hedge. To me, it's a hedge. So, and then, and buying when the business is good, right? Or when people misprice the business, right, side of things, right? Then that's when the time to buy. So there's a whole lot of understanding in this. It seems like very tough, but to be honest, investing can be very easy.
Okay, I like that. Okay, so do you mean that right now STI is undervalued now? I mean, do you perceive that way?
Okay, STI has our three banks probably occupies about, I think 30. I think below
40%.
40%.
40, yeah.
So if it occupies 40%, so you just have to focus on whether the three banks will do well in 1 year time, right? And the others, to be honest, I think the other there's going to be another 20% is REITs, right? And people are so like, well, I love REITs. Singaporeans is like, I don't want to sound very rude, but they love REITs. I mean, their obsession for REITs is like amazing.
Well, you're talking about me.
Sorry, yes.
It's okay.
So they are so in love with REITs that I got a feeling REITs price, regardless how negative the view is, right? Certain REITs, especially if the first name is called Maple Tree, it will stay like that one. You'll stay sweet, go up. Or sweet, at least stabilized one. Capital, if the first name is called Cappy, then something like that, you will also have the similar trend. So this kind of thing, it will be there and then it will be stabilized, the STI. So let's just say the STI, the lowest is about 2,400 plus I've seen. I mean, that's lower when it was doing much. But let's just say it's about 2,400 plus. So the other thing is about the other three banks, right? The other three banks is 40%. So what I see right now is they're trying to provide for the future where they are worried about bankruptcy. They are worried about companies going bankrupt. So they will need these provisions to build up their reserve. But let's look at what has happened the past 6 months or so. Government has give out like, 补那个洞啊. They have put out so much money into the system, and they have tried to, the hole is being taken, but they have put it back in. They try to plug the hole. There will be people that will go bankrupt, but to be honest, I don't think it will be that drastic. And when the provision is being written back, let's just say not this year or next year, let's just say to 2022. Oh, I provided too much. Let's revert back to the normal, right? That's when you can say that the STI will just, you will just go out. Let's just say, that's why I say don't talk about 2,000, 3,000. I mean, probably if they rise back to, if by then they rise back to normal, I think it's about 3,000 at least. So, and I'm giving that, like, when I say this is like 2022, so it's like 2 years down. But, I mean, it's not wrong. In 2 years down, you will still get STI ETF about 3% dividend around there. So 3%, then after that you get the gain of, let's just say $3,000. So now it's 2,500. So plus another about 500 divided by 250, about 20+%. So you got about 30% within 2 years. Not that bad, 15% per year.
Yeah. Well, it's good. In fact, 15% is already consider as above average, really. Yeah.
Yeah. So to me, if I get the 30% hedge, right, then the growth continue to grow, right, then US go into normal, right, then wow, then I think what liao.
Yes.
So that's how I see it generally. Yeah.
Okay, good. So, yeah, ladies and gentlemen, if you're on hearing us, do you have any questions that you want to ask Terence in particular? You can just type on it on the comment box or on the chatbot Zoom, and we are more than happy to answer that questions. Right. So, so Terence, in this case, going forward, now other than the three stock, now you have actually give a sort of like a full overview of what's going on. So going forward, can you sort of like give us a hint, or rather give me a hint instead? What are the sector that you will be concentrating in the next, let's say, 4 weeks? You know, what is the particular sector or companies that you'll be looking at?
Next 4 weeks, I will probably still buy into tech, into tech in the next 4 weeks, as in if there's any share price, if the share price drop. To be honest, I want to tell you something. I brought 2 stock of Tesla at 3A because I want to see so low, try.
Make
Then
money
I ran
really
into
long?
stock. No, but to be honest, before it went up, right, I was telling, oh yeah, let's not waste. What happened? You know, you tell yourself this, and then you become very frustrated. Then, get a bit money, get already, forget it. Don't make yourself frustrated. Tesla, cannot. Don't know yes or no, yes or no, right? All these things goes into your mind, right? Then you sell it, right? Then you know, like what, right? People what I see now. But it's still fine. I mean, it's still fine. I wanted to me at that point, Tesla, I was like, I said about tech is because I have my portfolio is focused on 5G. I have a team that is on 5G.
Okay.
And then when 5G it's a very general team. 5G is like can be anything, right? Anything can be related to 5G in the next 2 to 3 years. If a company say going digital, it can be 5G. So there's actually segmented parts. And one of the segment I have actually I have a YouTube page. So in my YouTube, I actually talk about connected cars. So I do like this segment. I think instead of talking about self-driving, right? Why not we look at cars being connected to the system, right? That's when it can be a more recent and so the revenue can be earned faster because self-driving may not come so fast, right? It will probably go into masses maybe in 3 or 4 years time, but connected cars as a team itself or as a industry itself, right, it's already happening right now. And then there are some companies that's doing quite well in US. So that's one of the areas like connected cars, 5G, and then I also looking at. That's why I say tech. I have FANG. I probably have Google. I say I have Google. I have actually Microsoft as well. One of the main thing of Microsoft is that, you know, I last time I really don't. I brought Microsoft at a higher FYI, and then I just keep buying because if you look at their cloud business, it's damn amazing. It's like they want to be in every single industry and be the cloud provider for every single industry. It's not like Amazon. Amazon is just the marketing of Amazon AWS. Like I'm here. If you want me, come and find me. But Azure is not like that. Azure is they have for example, car connected platform.
Yes.
They have Ethereum. Ethereum is the Bitcoin, that cryptocurrency kind. Ethereum, they actually allow some smart contract, if I'm not wrong. That was quite long ago. They are going into, I think they're also building something with some satellite thingy. You know, recently, really, I think there was an article on it. But okay, maybe I'm wrong, but I know that they are like in every platform. They are like trying to be the platform of the platform. You know, the cloud is to be the cloud for all the different platforms. And when it becomes that, right, it's like every industry will eventually be using Azure. And that to me, I think is very amazing. And I'm not even I haven't even thought about their Xbox, what they are doing with their Xbox. I haven't thought about their 365. No, these are all like out of not even their cloud business. So that's how I look at Microsoft right now as well. So generally, I'll just buy into tech when it, like I said at the start, when it goes straight, I'll buy more into tech.
Wow. Okay, good. So just now when you show us the fundamental scorecard, are you using that to guide you to Microsoft stocks like Microsoft or Tesla as such? I mean, do you actually use your scorecard? Because I know that you developed this whole systems yourself, and you sort of like aroused my interest. It's like, how does this scorecard actually help you to?
Okay, so maybe I just share for those that never see it yet. So this is a scorecard. So like Google, this is a scorecard, and then we have some summary here. When it's okay, it's very standard. Tick tick, then good lah. Cross then not good lah. Then we have some score here that is anything above 65. We are just say that this is damn good company, and then we have some intrinsic value calculation. So this is a very basic view of the scorecard. Obviously, the back end is very complicated. If anybody is interested, you can always, if you sign up already, you can always tell me. Okay. then what I want to say is that yes, I am actually very reliant on this scorecard. Okay. Regardless how I see one of the way I use it is that, it's like I read an analyst report. You don't read every single word that they say. You read for the facts and what the facts help you to build your case study. So that is how I read this report. So like I say, when I show you guys the Macy one, right? To me, I already know Macy is shit. So this cross doesn't matter, right? Because I already know it's not good. People are not thinking that they are good. And then this doesn't matter. But to me, I was like, wow, why is the intrinsic value like that? Then I was looking, then after that you realize, hey, intrinsic value so high, why the profit? So you see, these are some questions that I can, as a business analyst, I can analysis kind of thing, I can go in depth and review it. So that's how I use the scorecard. I don't read like, to me, if they say like liquidation value is 0, wow, some don't buy. No, I don't do it this way. I do it in a more like I read for the specific deals, information that will help me build my case for that company. But having said that, I know this is because I built one, so I know how to read it. But for newcomers like you, maybe you're, what the hell, what are you talking about, right? So that's why I also show that, like for example, for Google, right? Standard, tick, good. This score above 65, good. Yep. Intrinsic value higher than your current share, good. Then you just go down and company have no issue, good. Literary, then wow, price rise, good. Wow, plus. We are trying to do right now is make it very, very very graphical, very easy to. I mean, basically anything
intuitive.
That's upwards. Yes. Anything that's upwards looking, when you need to look up, good. Something along that line. This build your quantitative.
Okay.
And after that, people should go into qualitative and then build up their case. Have a case on why you want to invest in the company.
Okay.
So that's how I use it, and then people was just this is called fundamental scorecard. So maybe people will scold me wow, why you make this thing like say until so easy, but to be honest, it's not. If you ask me, right, the back end, I can tell you there's so much hard work in the back end on their back testing and stuff that we did, right? That's why I'm so reliant on it. But obviously, if I give you all the details or I let people see all the details, people will be crazy lah, because I think the formulas is like, people are like, what the hell is this? So one. So what we are trying to learn is just simplify everything for you guys. And that's how I analyze using the fundamental scorecard. Yeah.
Good, man. Good. I wish that I have the time to sit down and go through with all these items with you, because it look graphically impressive. I mean, I don't know what the numbers are, but again, graphically it does look good. So yeah, it's something that I mean, ideally, if you ask me, Terence, it'll be nice if I ask Siri, Siri, hey Siri, can I buy Google today? Then Siri will gonna say, yes, you should buy at $1,400, and the potential gain is 15%. That's, if you can do to that AI standards, then that would be very nice.
I also look forward to that day.
Okay. All right then. So thank you so much, Terence. Anyway, I just want to ask if there's any questions from anyone from the who are actually watching us on this channel. Do you have any questions? If you enjoy this segment, can you just give us a like on the respective Facebook page? And and of course you can contact Terence directly, or you can contact me. Terence has is a prominent local financial blogger. If you want to find his blog, you just need to Google TUB investing, right?
Yeah.
TUB
investing.
Yeah, TUB investing. Yeah, so that you can find all his articles. And yeah, Terence has been a very supportive friend of mine. So perhaps some of his investing strategy may inspire you or give you some ideas, different strategy. So for that. All right then. Any last word for all the audience here tonight, Terence, before we call it a night?
Don't worry what happened to the US elections. Just watch the show and then stay invested.
Good. All right then.
Okay.
Okay. Thank you, everyone. All right. That's
Thank
all
you,
for this
everyone.
session.
Good night. Yeah.
Good night. Bye bye.
Bye bye.